Hey guys, how are you? Vladimir here from Traders Academy Club, and this video is the weekly market analysis and a forecast for the week 13th to 18th of September 2020. I hope you had a wonderful summer on the last months or so. I did not upload my weekly videos. It was a busy summer period here with the family things. I hope you had a great summer on your side. Everybody is well and safe. To all those of you who have kids, I wish them a very successful year in school. I hope everything is going smooth, well, successful, and mainly in our reality, safe. If you are new to our great community and channel, I would like to invite you first of all to subscribe to the channel. And if you find this video useful, educational and helpful, please hit the like button and leave your comment below. Feel free to share this video. It's completely open to the community, and the goal is to help as many traders out there as possible. Also, you can join our free Telegram channel where we share for you trading ideas on daily basis. And I would like to also invite you to join my live trading rooms where we are going and making live market analysis on daily basis, followed up with trading reports. The links to both you can find below this video in the description or in the pinned comment inside the comment section. Now let's see what the market has for us, and we have several opportunities. The first one which I find interesting is the euro dollar. By reaching the very strong resistance zone here next to the round number of 120, and by duplicating the range of the Bollinger Bands on the weekly chart, I believe that we are now in a period of a slowdown. The buyers were under massive control. It was driven by a great fundamental support when the central bank of the Eurozone basically says there is no worry about the current euro strengthening. Which is okay, but as always in the political games and in official political announcements, things like that, there is always two sides. There are always two sides for every coin, especially when it comes to such political things. So the way I see that, not all the truth was said to the public. And personally, I believe that as long as this area holds here around the psychological level 120, we should experience slowdowns. Now this slowdown could be in a two waves correction before further continuation, or it can simply continue to move inside here. But by saying that, I believe personally that every rally for whatever comes should be an opportunity to consider and look for a sell trade. And the way I see that, if rallies do take place, I will be looking for bearish evidences, expecting a bearish bounce. Pound dollar is another great one on the list, but before that, let me know, what do you think about the euro dollar, and drop your view on the comment section below this video. Pound dollar is a great example of a key resistance zone around a round number psychological level 135. Massive divergence at the ending part here. The way it looks right now, we are building the first wave of correction. So what is next with this pair? As we can see, we have two very strong supportive areas on this pair. If we draw the rising broken supportive line, we are now below that, and we come also to the 200 moving average dynamic level, and this is a great zone to expect the price to make a retrace. Also, if we take a look on the daily chart, we are now in a straight move from one band to another on the Bollingers, and right now this doji is a great sign that by the end of the previous week the ratios between the buyers and the sellers are equalized. So what is next with this pair? On the lower time frame, it starts to form sort of divergences. We have it currently on the histogram of the MACD and the RSI. As I mentioned, on a daily chart, we have some strong supportive zones on the way here. The next one is slightly lower, as you can see. So I believe that this area is going to be a supportive area, and every drop taking place towards that should provide some corrections, and then likely to believe next opportunities for a bearish continuation. If my analysis is correct, we should experience a pullback and then a bearish continuation. Keep in mind that fundamentally speaking, sentiment is super negative on the pound with all the latest developments between UK and the Eurozone. Now Boris Johnson comes with new threats. Definitely do not do well with the pound, and the pound is in a straight move from the zone of 134, 135 through 128. That's making it more than 600 points in a straight drop. So this is my view on the pound dollar. Let me know, what do you think about this pair? I find it personally very, very interesting, both short term and the longer term, as I just shared. My next one on the list is the CAD franc. The pair had a beautiful trending structure here, ended with the bearish divergence right on a resistance zone and a round number of 0.70. From the very top, we got classical false breakouts followed up by a beautiful candle switch to the bearish direction. And after a significant drop, we can see the price tries to slow down, okay? And we have some very powerful supportive zones, supportive range on the go. As per the Bollinger Bands, also almost from the top of the upper band through the lower band, making it around 50% deviation of the big range, bringing in with the slowdown we currently have, and the 1 hour chart, as we can see, each wave getting smaller and smaller, which normally also make it a great sign of a round and a possible bounce. Pay attention to the developing divergence I just marked before. It started here, now developing here. It's also seen on the RSI and the histogram of the MACD. These are classical combination of technical tools for a potential reversal. And the way I see that, this area is the area where we will see that slowing down and making some pullback. How will that develop further on? It's hard to say at that moment, but it definitely looks good from my point of view as a short-term opportunity. Another interesting pair I see on the chart is the pound New Zealand, a pair that had a beautiful rally here and had all the possibilities to, technical reasons, to complete second wave before the pull to the downside. Never managed to hold it, and after holding the hidden divergence here with this new high, making a retrace. Now this retrace is in a V-shaped pattern, goes through all the Fibonacci levels inside the first rally, one straight movement, which makes it a strong bearish momentum. So where can all that fit? One of the ways to see that here is a ABCD correction towards this movement. Of course, we can discuss about this one as well, and ABCD correction before any possible continuation next. Now, the way I see that, we are about to complete the second leg until the bullish divergence would complete on the weekly time frame. When it will happen, it's impossible to say, since this is a long-term opportunity. But what is clear now, that after pretty narrow Bollinger Band, we got a straight movement, and there is a great chance it is about to continue. We have no signs against on the weekly, no signs against on the daily, and even not on the 4-hour chart, which from my point of view makes it a great sign for retraces. Whenever they happen, should deliver a great opportunity to consider the continuation to the downside. My view on this pair is very bearish, and I expect to see further continuation downside. If we drop Fibonacci expansion on that level, you can see that 61.8 is a great first zone to pay attention to, and if it breaks through, who knows, maybe it's the beginning of a move down towards the 100 level of Fibonacci expansion, and that's massive. Going to commodities, I find oil is a great opportunity. We saw a key resistance zone here from a daily chart, a long dance around these levels. The market had hard time breaking through this roof, and the dynamic 200 moving average keeps its negative slope and its negative impact. Add to that the fact that we were dancing around the round number 45, that makes it as a great possibility of a correction. Personally, I think this correction is temporary, and later or sooner this hidden divergence would build up and complete, and then we should be exposed to new rally. But until then, look at the way that it develops. The first leg of the daily correction just gains momentum, and that makes it so the way that the first daily leg is forming the waves on the 4-hour chart looks very bearish, and these pullbacks as they happen towards this, you can see we have several strong zones on the go. The first one right here with these two spikes that we're holding, and also rely on the previous zone. All that happens next to the round number 39. The next one is here. This consolidation zone also comes on a very, very powerful resistance area. And the next one, of course, is the round number 40 as hold right here. So the closer we get to this holding resistance zones, as we can see them on the chart as well, the better the bearish pressure should be. And I would not be surprised if every rally at the moment will give some new bearish evidences and opportunities to ride that to the downside. As I mentioned before, I think it's all temporary, and I would not be surprised if the correction here goes ugly for a while. Okay, that's very, very, very common scenario after strong impulsive ways to go into some annoying range. But it doesn't change the fact that from the technical view, these short-term rallies should be nothing more than a noise. And of course, in majority of cases, the market can surprise with its behavior. But as for now, technically speaking, putting all the facts as they are together, the bearish view looks as the better opportunities. And once we finish with this correction, we have several great supportive zones on the way. That's where I would personally expect to see the oil delivering next further buy opportunities. Another one that I want to share, that's basically coming from the indices. And we can go to all of them. Okay, we can go to the Nasdaq, S&P, and of course the Dow Jones. And it doesn't matter which one, I will go with the Dow Jones here. And the way I see that after this massive rally, we are now stuck with a strong divergence. This divergence is clearly seen on the MACD and also the RSI, both histogram of course and the moving average on the MACD and also on the RSI. The 4-hour chart, the way it develops its wave starts to be also very, very interesting. And the way I see that, this is the first push to the downside. We can of course make it even this way, and this is the second. So I do want to see this low being broken. If it does manage to complete that, then it's a great sign that we are likely building up a bigger, deeper corrective phase. And that's what I really want to see from the indices. This low being broken, completing another low in a trending structure, bearish trending structure pattern, completing here the divergence to make the reversal signs, and after this reversal looking for some deeper pullback. the way I see that, and if there will be no surprises, and let's admit it, it's indices, especially American indices, they are rallying not always with a logical reason, but at the moment, the way everything starts to form and the way that we are building here potential reversal to the downside by making for the first time some lower lows, hint that there is a good chance for a deeper correction. But before that, we need to complete the trending structure first and make sure it is the bearish officially, in the bearish pressure officially. So that's my weekly analysis for the week. I would like to invite you to enjoy our full list and full opportunities that we share on daily basis in our live market analysis. And I would like to invite you to join Traders Academy Club, and the links to that is right below this video in the description or inside the pinned comment in the comment section. Thank you very much for your time watching this video. I wish you a fantastic trading week ahead. Stay safe, be well, and I'll see you around.